So, did you get caught out by the stock market April Fool's Day rally? First, how to leverage your portfolio without using leverage. Let's have a look at my Interactive Brokers account, one of my largest accounts. Here we are. This is my Interactive Brokers. How am I doing? How am I able to leverage this without leverage? First, let's have a look at performance. Ooh, look at that. Starts there, 0, and here we are. 31st of March, last update. 1.7% up versus S&P down 4.6%. What about Nasdaq? See, this is how you're going to leverage. Look at that, down 7%, and I'm up 1.7%. So how do you do it? Let's use Microsoft as an example, and I'll show you how to leverage your portfolio without using leverage. It's basically what I've been saying forever, which is to buy the accumulate when it drops and distribute when it goes up. So let's have a look at Microsoft. Here we go, there's Microsoft. So say here at 486 you own, as an example, 2 shares, and it's falling and falling, and you're accumulating, and by 380 say you got 5 shares. So you bought 3, and it rises here, and it's not risen much, so you probably didn't. I was aiming for at least 10%, and preferably 23%. So you probably would not have trimmed Microsoft. It maybe not the best example, but Meta would have been a better example. But anyway, we're here now. So you didn't trim, so you got 5, and then it takes another nosedive. And remember, my target is 340. Target is 340, and it could overshoot to 333. Beyond that is getting lucky, 300. So I am positioned to buy the dip, as are all my patrons. So it's 5 here, and by here it's at least 8, maybe 10, because we're getting close to the target now. We don't want to wait for the target. So by here we've got 10. So how are you leveraged? Well, basically when it starts going up, your break even, because you're skewed heavier buys are lower down because you've already trimmed going into the top. Remember, ahead of this there was basically selling most 80% of one's position. So by here you've got, say, 2 shares, by here you've got 10, and your average is probably around 390. So then say it goes back up to 490. Look how much you made, 26%. You're up 26%, and most folk will probably just be buying the dip. They're probably around break even on their buying. That's how you leverage without using leverage. You don't want to use real leverage unless you know what you're doing, because you'll get wiped out, especially with the 3x ETF. I do use them, but very tiny positions, tiny, because you get your timing wrong, you're dead. Anyway, that's just a quick look at how to basically accumulate and distribute. This is how we will distribute. I'll sell here now. When it goes up, which it will do, if it doesn't have a lower low, and further opportunity to buy, which I think it will have, then I would distribute some here at 14%, not much, but the main distribution would be here at 36% from the bottom, and probably the average is around here 380. So that's still 27%, and then if it dips again, I accumulate once more. So let's take a look at how the stock market is doing. Have you been buying the dip? The stock market trend is playing out like clockwork. It's playing out like clockwork. Oh, there's my forecast, 63.50, and here's a graph of everyone else's forecast at the beginning of the year. Average was 7,550. Even Jordani was way off the mark. That's what I expect the S&P to end, and this is as of 28th of December. So it's not like I'm saying this after it started falling. I was saying this before it topped, just as I did in 2021, before the market tops. I'm telling you what's going to happen. Not after it's already fallen. Was it 10%? Yeah, nearly 10%. Yeah, it's fallen 10%. So that's the roadmap. So what about my working chart? What's my working chart? This is my working chart. It told me that off 6300, expect a bounce that targets 6620, which has happened, and I posted in the comments before it happened, like around 6350. I said I expect it to first cross 6520, but it's mainly targeting 6620 from where I expect the downtrend to resume, and that's where we are currently. And it's going towards below. It's going to go below 6350 down to 6180. That's what it's now targeting. So I'm expecting the downtrend to resume, to target a break of this low 6300 to get to 6180, where it will probably have another bounce. Yeah, maybe get to. Well, I've already penciled. Alright, let's move this down. Let's have a look. Where could it bounce from 6150? It could bounce. Well, it'll target these levels again, 6200 and 6480. So once it crosses 6300, it'll get to about 6480, around there. Rough. This is all rough. Obviously, I haven't got a time machine, so don't take these as cast in stone. These are just best guesstimates of how the trend could play out in line with my trend forecast. This forecast is as of 28th December, so obviously there's going to be a lot of variations, but what's important is the direction of travel, the opportunities to accumulate target stocks. I'm not too fixated then if it is exactly trends out, as long as the direction of travel is correct. If we get something like 5200, I'll be jumping for the moon, because look at the buying opportunity. Whether it comes in May or whether it comes in October, it doesn't matter. And because I've got my working chart that tells me where the swings are to distribute into, if there's opportunity to distribute. You don't sell for the sake of selling. Like I demonstrated with Microsoft, there has to be an opportunity for the profit. It's not just, I'm going to sell for 2%. No, you want at least 15%. Like Meta's delivered some properties. I bought it for $520, I think. I sold it at $590. It's a okay profit. This is where also the 2x leverage come in handy, because they give you that little profit for the little swings, but that's for folk who know what they're doing. Anyway, everyone's obsessing over oil price. Yeah, the oil price. Here's the oil price. Look at it, it's gone back up. It was falling. Went to 96, now it's back up. But that's not the main problem for most folk. Yeah, filling up your tanks. The main problem is when fuel prices feed into food prices. We may see some panic shopping in the supermarkets as folks stock up. There's panic before the price rise. Shelves are run empty.
Iran has been essentially decimated. The hard part is done, so it should be easy. And in any event, when this conflict is over, the Strait will open up naturally. It'll just open up naturally. They're going to want to be able to sell oil because that's all they have to try and rebuild. It will resume the flowing, and the gas prices will rapidly come back down. Stock prices will rapidly go back up. They haven't come down very much, frankly. Thanks to the progress we've made, I can say tonight that we are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. In the meantime, discussions are ongoing. Regime change was not our goal. We never said regime change, but regime change has occurred because of all of their original leaders' death. They're all dead. If there is no deal, we are going to hit each and every one of their electric generating plants very hard and probably simultaneously. We have not hit their oil, even though that's the easiest target of all, because it would not give them even a small chance of survival or rebuilding. But we could hit it, and it would be gone, and there's not a thing they could do about it. They have no anti-aircraft equipment. Their radar is 100% annihilated. We are unstoppable as a military force.
And do see my latest extensive article on how I expect the great bear market to play out. Yeah, posted a couple of days ago. Yeah, there's President Dumbo. Yeah, Trumpstein. Look at him, he's got his troops ready, raiding the beaches. Liar in chief. So do check out this article, extensive article that's first made available to patrons who support my work. It's extensive. It covers the CIA team crashing, the bear market milestones, Trumpstein's war on. It goes on and on and on and on, and it covers lots of bases that folk need to know. Bear market drawdowns, buying opportunities in AI. In fact, it goes the next presidential election, who could possibly be winning. It's a pendulum, you know, a political pendulum. It swung towards extreme right. You better be ready for the swing to the extreme left. You know, president, the MAGA are not gonna like it. Then there's Bitcoin positionings coming full circle with circle stock and more. There's lots. So do check out that article. And do consider becoming a patron by supporting my work for just $9 per month. I'm too cheap for what you get access to. Seriously, for what you get access to, I'm too cheap. You know, because I put my money on the line. If I'm wrong, I've got an incentive to be right, because I'll lose money. You know, I want to know, okay, we're here at 6,300. What's going to happen next? Most probable is it's going to go to back up here, and that's what it did. Now, next, that's already happened. That's in the past. Yeah, obviously, I've told patrons before it happened. Now, in fact, I said this here at 63.50ish, 66.20 before it targets a break of 61.80, which it will do. And what comes after that? Below 6,000. What comes after that? See, I'm telling folk well before, below targeting a break of 5,600, and I've not got what comes after that on this, but it's not like I'm saying it after the fact or near the fact. I'm mapping these out well in advance as per my trend forecast, which is this. This is my look. There's that 5,600 there, and there's the 5,200. And there's the 6,000, and there's the 65.20. Yeah, all these levels were as of 28th of December. So I already did the math, the extensive analysis that went into generating this before the end of 2025. So all these are fine-tuning and, you know, real-time adjustments, and you got the minor cells and the major cells, but there's nothing different. It's still as per trend forecast. It's just reacting to the price movements in real time. I can't put this swing up in December. I have to see where the price is now to know what it implies next. It's had a massive swing down, 5%, so it's going to react higher off the low to target the breakdown point, and it's going to do it again. It's going to go down to 61.80, where it will probably have another bounce to around 64.80, and then it'll have the next leg down that will take it below 6,000. I'm sure I mapped it. I already mapped it out. So if it gets to 60, what did I say, 64.80, it'll go below it'll go below 6,000. If it rallies off of 6,180 to 6,480, it will next go below. Yeah, it's gonna go below 5,900. Probably below 5,800. 5,850, call it. And that's en route to 5,600. And that's en route to the final destination, 5,230. And that will mark the start, the end of the bear market, the bear market bottom. That's my best guess. My best guess as of 28th of December, it bottoms around 5,200. But as you know, I'm not waiting for the bottom. I'm already accumulating target stocks as they come. I have accumulated a lot of Microsoft, some okay amount of Meta, but I already got that. And whatever drops, I'm going to accumulate. And if they pump, like here, if they get a swing up, then I will distribute whatever gives a decent profit. Yeah. The main objective is to accumulate a position. I'm 71% cash. That's a lot of cash for me. You know, at the April 2025 low, I was 16% cash. Around that, I can't remember that, maybe 15, 14, but around 16% cash. 71% cash is a lot. But I'm not just going to blindly buy. I've got my buying ranges. Patrons have got my buying ranges. They see what I tell people every day what I'm buying, especially the big buys. Small buys, yeah, I even let people know what the small buys, even though they don't affect my portfolio because they just pinpricks. They don't. The percentage doesn't. Percentage changes with the big buys. You know, something like 4% of my target position in Microsoft in a day. That's what moves the needle. Small buys, they don't move the needle, but I let people know what it's a game of accumulation distribution. Like here, S&P accumulating then drop and then distributing on the profit. I do some futures, but lightly, because to me the S&Ps are nothing big, so I don't want to affect what I'm doing with my portfolio. I do trade it, but very lightly. It's like pocket change. If it makes a profit, there's a profit. If not, it's not of any consequence or significance, because to me it does not affect what I do with individual stocks. This is more for you lot, for you folk, for patrons. All this is mainly for you because it doesn't affect me what I buy. So I've got my buying ranges. So I know stocks move in their own time. There's stocks that are pumping right now, and there's more stocks that are dumping. And so I accumulate what drops and I distribute what goes up. And I'm not saying it's, I don't expect this to pan out, because I put in a lot of work to generate this. It took me a month's work, a whole month. You can go read the article. I think it should be open to public by now, maybe in April. Yeah, it's April now. So that article, I can't remember how many months, maybe 4 months. So you can read the amount of work I put into it. And all this whilst the salesmen, they're blooming penciled in 75.50 by year end. Where's the deviation to the low? This is what the morons were expecting. S&P to do that by year end. Yeah, just steady up. What about all this dip? It's not even on the radar. Don't believe me, go look at the crap they came out with. They're not positioned. They were never positioned to buy the dip. So even if it gets to 7,700, which would be fantastic if it does. If the S&P falls to 5,200 and it gets to 7,700, that would be fantastic. Even on this crap, you're looking at 40%. But they won't make 40%. They'll make, because they're blooming still in cash, they make about, 6%. See, that's being leveraged. That's an example. They're going to be up 6% on the year because they just held and maybe did some dollar cost averaging. They're not going to make peanuts. I'm going to be up at least 40% because this is the S&P. I would not buy an S&P ETF because it's not volatile enough. Maybe the 2x leveraged ETF because you need some volatility, like from a bottom to say 7,000, 33%. Yeah, it's okay. I want, because you're not going to capture this 33%. You're not going to capture it. You'll be lucky to capture half of it. So realistically, those who are dollar cost averaging, even if they sold most on the pump, they're going to make about 15%. And it's just not worth it for me. For me, at this level, at where I'm at, it's not worth it. I want more. I can make more than that. As I showed you in my portfolio, you'll be able to see. Yeah, with my portfolio chart gone. Yeah, you'll be able to see by year end. I will have made, if things pan out as expected, I will have made a lot more than the Nasdaq or the S&P. They'll probably won't even be back. The S&P probably by year end won't be trading level. It'll be roughly where it is now, down on the year, and my portfolio will be up on the end of the year if things pan out as I expect them to. We get this deep dip, I plow a lot of cash into stocks, accumulate, get down to maybe under 50% invested, maybe more. I don't know. I've got no target. It all depends. It all depends on the opportunity. Anyway, I'm waffling on now. Do check out my other videos and subscribe for new videos, and do consider becoming a patron. And this video is a mere fraction of my extensive analysis that is first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $9 per month, which is nothing compared to what you get access to. I try to do best by my patrons. Folk only need to go read my articles open to the public and the literal thousands of comments under them. Look at this one, 2,200, nearly 2,300 comments under this article, which shows the level of engagement with patrons. Keep calm and carry on buying AI tech stocks as they deviate from their highs. Where the greater the deviation, then the greater the buying opportunity presented. Keep calm and carry on buying. Quantum AI tech stocks. Access to my latest mega analysis, a comprehensive 3-part guide on how to really get rich during 2020. That has exclusively been made available to patrons right now. You can go and read the 3 guides right now, full access, which is a truly epic piece of work that took me the whole of 2023 to write, which condenses down my lifetime knowledge and experience down to some 60 chapters, which is on top of my ongoing analysis and trend forecasts that are made available to patrons for just $1 per month. There are no bolt-on extras, no courses, no other crap that all these con merchants do. You get full access to everything. So, did you buy the October 22 bloodbath, especially in tech stocks, FANGs, with the likes of Meta plunging below $100? Well, I and my patrons did. Go read my articles and the comments posted under them. We got well blooded by catching all those falling knives. Did you make the mistake of listening to the likes of Clown Kramer on the Cartoon Network, who stated Meta, amongst others, was finished? Meta finished at $100 a share, was the mother of all buying opportunities, This clown stated it was finished. Says it all about Clown Kramer and the Cartoon Network.
They're finished. They're finished as places.
They're finished. They're finished as
places to invest.
We keep talking about this falling knife, as if the knife continues to fall. Though there are people who look at this and say,
look, I'm looking at the money coming out. Where's the money coming from to buy to buy industrials? It certainly isn't coming from new people saying, "Wow, it's time to put money in the stock market," because they get such a great rate on the 2-year. I think it's money coming rotating out of companies that have dominated this market for the last decade and into companies like Caterpillar who actually know what the hell they're doing.
Are you thinking that the tech companies that I think that you're disappointed in are going to get religion, if you will, and get disciplined? And what does discipline look like?
You know what they are? I would call them atheists. They believe in nothing.
That's a nihilist.
Meta? I don't know. I think they have to change the name again. They really do. I mean, you can't be saying Meta. I don't know. How about loser? How about stupuda? I don't know. Anything doesn't even matter. I don't know if they can make a comeback. The facts have changed, and I have to change with it. I believed. I thought I'd be safe. I was wrong. Bottom line, forget being leaders. Big stocks are now followers in a post-COVID era, where we're learning that their earnings were far more inflated by the pandemic than we knew. We're just now discovering that tech emperors have no clothes, if they're even emperors at all.
So at least give it a try. Read the comments, see the depth of analysis. You won't be sorry because I do my best by my patrons. Go that extra mile. Gaining access to over 35 years experience. Right from before the 1987 crash straight through to this stock's bear market. That will ride the quantum AI megatrend into the future.